Hello everyone, this is a video that is providing a high-level overview of the topics that you're expected to be prepared for when writing the midterm exam, which is scheduled for Wednesday, October the 9th. So it will be held in your regular class times in your regular classes, as indicated there. So as usual, no cell phones, no translators or dictionaries. Your IDs will be checked, so make sure you bring your SMU ID. And if you're bringing a bag, you know it's got to be left at the front of the room along with any coats or jackets, whatever. The exam format, there will be 10 multiple choice questions. There's no calculations required for these questions. They're word questions. Then there will be 5 problem-solving questions, so 1 from each of the 5 chapters that we have reviewed so far. So that would be chapters 3, 4, 5 rather, 7 and 8. So with these problems, they're all calculations, all problem-solving, and no short answer questions for the midterm. Exam protocol. So during the exam, we really need you to limit the number of questions that you ask. So the only type of question you should be asking is if there's a word that you don't understand, I will translate it and provide other words that would have similar meaning. Or if you think there's an error on the exam, but there's no point in asking me, oh, is this the right method? Am I on the right track? Or I can't obviously answer that. So if something is unclear, just write down your assumption and I will mark your question accordingly. So in terms of the chapters covered, Chapter 3, Cost, Volume, Profit. Here, of course, we looked at revenue less your variable cost would equal your contribution margin. Break even, you need to know how to do break even, both in terms of the number of units and in terms of the cost or dollars. Target profit, so this is where you're building in the cost not only of your fixed assets but also a target profit, and here you need to identify how many units you need to sell or what is the revenue in dollar terms. So when you're looking for a certain amount of money to be earned to cover your fixed costs and your target profit, you divide that by either the contribution margin percentage or the contribution margin in dollars. So if you're looking for the number of units you'd have to sell, then your denominator will be in dollars. If you're looking for the sales dollars you need to generate, then your denominator is going to be contribution margin in percentage. The other topic we covered here in Chapter 3 is margin of safety. So this looks at your revenue less your break even. So how much money are you making over and beyond what you needed just to break even? Again, you need to be prepared to calculate this in terms of the dollars of revenue or the number of units. Finally, with the cost, volume, profit formulas, this is used to conduct what-if analysis. So you can use the CVP to calculate what would be the impact of an increase or decrease in your selling price, in your variable cost, or your fixed cost. Chapter 4. So Chapter 4 is all about job costing. So here we are looking at your direct materials and your direct labor. You're always going to use actuals there. However, for your manufacturing overhead, you're going to use an allocated rate based on a budgeted unit rate. We use an allocated rate for overhead because during the year, you don't really know all of the overhead that's going to be incurred. You don't know the exact number, so you use an estimate or an allocated rate, and then at the end of the year, you would do an adjustment. So the formula for that is your budgeted overhead cost, and this can be divided by whichever cost driver a company determines is relevant. So it could be your budgeted overhead could be divided by either your budgeted labor hours, your budgeted direct labor cost, or it could be machine hours. So just to give you an example, within one company there can be two departments that have different allocation bases. So for example, one department might allocate their overhead based on the number of direct labor hours. So for every direct labor hour, they might add, say, $10 of overhead. While another department could be using direct labor costs. So in that case, for every $20 in labor, they're going to add a certain amount of overhead. Obviously, at the end of the year, your actual results for all of your overhead, once all those invoices are received, will probably not be exactly equal to the amount that you've allocated, because the allocation is just based on an estimate. So you're going to have to do some adjustment at the end of the year to adjust for your under or over allocated amount. Okay. So Chapter 5, Activity-Based Costing. So in Chapter 4, we use the traditional method where we just had one overhead rate. In this chapter, what we're doing, we're breaking down overhead into all of the various activities. And there's no set type of activity. Every company will come up with its own unique activities. So for example, you could have a company with an activity for equipment setup. So it would be the cost divided by the number of setups will give you your rate per setup. For quality control, the cost of quality control divided by the number of inspections, which would give you your rate per inspection, and so on. So then you would multiply the rate for each activity times the actual usage. So it's activity-based costing. Chapter 7, here we were looking at flexible budgets and variances. So we looked at actual, static, and flexible budget. And variance analysis applies to your sales, your direct materials, and your direct labor. So your rate variance, you're looking here at your cost or price per unit of direct material or direct labor relative to what you had budgeted. So you're looking at your actual direct labor cost versus your budgeted direct labor cost. So that you could end up with a rate difference on materials and labor. Efficiency looks at whether or not you use more materials or more labor than you had anticipated or budgeted. So you're looking at the actual amount compared to the amount allowed. So for Chapter 7, so these are the variances. You have a rate or price variance. So rate and price, these two terms mean the same thing and are used interchangeably. So there is your formula. It's your actual price minus your budgeted price times your actual inputs. Efficiency variance, again, it's the same formula whether you're doing materials or labor. So the examples are using materials, but the calculation is the same. Just substitute labor where it says materials. Okay, next moving on to Chapter 8. Here we continued with variance analysis, but in Chapter 8, we're moving on now and looking at your overhead. So we're breaking down the overhead into its fixed and variable components. So when you're looking at your variable overhead, you will have a spending variance, and you can see the formula there on your PowerPoint. And you will have efficiency variance. So spending, did you spend more on overhead than you had planned to or budgeted? And efficiency variance, did you use more of the cost allocation base than you had anticipated? Chapter 8 also included your fixed overhead variances. So your fixed overhead, here you're looking at rate variance and a production. There's no efficiency variance when you are discussing fixed overhead. You can't obviously be more efficient in your use of overhead for fixed costs. So think about your fixed expenditures related to overhead. It could be the lease, for example, on your building. Well, doesn't matter how many units you're producing, that cost is not going to change. However, what can change is your spending. and it's a very simple formula. It's just your actual overhead, cost incurred, less your budget. So that one is fairly straightforward. So did overhead come in at a lower or higher amount than you had anticipated when you developed your budget? For production volume variance, here what you're looking at is how much overhead did you allocate. That is affected by production, because when you're allocating your overhead, you are identifying a certain amount per unit, and the more you produce, the more overhead you're going to allocate. Or if you don't produce as many units as you had anticipated when you developed your budget, you might have an under-allocated budget amount. So finally, some suggestions to maximize your marks. Show all of your work. So if you don't finish a problem, or you start it and you can't finish it, do what you can. Partial marks are better than no marks. So I always give partial marks. So try to do some work on the problem, even if you can't do all of it. Write down your assumptions. If something seems unclear or you're not sure, just say, I'm doing these calculations assuming that this is my direct labor rate, for example. Of course, it's important to go through and do the calculations for the chapters that are listed on the syllabus. So there's the in-class questions, and then I also have extra problems, extra practice problems for each of the chapters. So review those to improve your speed and expertise. In addition, if that's not enough problems for you to practice, there's also lots there online in your My Accounting Lab, and that's an excellent resource as well. Another key point to remember is time management. I'm sure you've heard of it before, but I stress, for accounting exams, you really have to budget your time. So if a question is worth 20%, you should be spending only 20% of your time on that question. So 20% of 75 minutes would be 15 minutes. So try to be strict with yourselves, so don't overspend too much time on one problem and not get another one done at all. So move on to the next problem, and then if you have time at the end, you can always come back and finish it. But don't spend more time on a question that's only worth 10 marks versus a question that's worth 20 marks. And of course, as you hear me say in class, practice, practice, practice. It's the only way you're going to be proficient and have the accuracy and the speed that you need to complete this type of accounting exam. And of course, if you have any questions, be sure to let me know. Stop by my office during office hours, and I'll be happy to help you either in person or by email, whatever works. So good luck with studying for your exam.